Hey everyone, today is Friday, May 30th, 2014, and this is your precious metals market update. I'm recording this at about 2:04 p.m. Pacific time. And I wrote an editorial yesterday. You can look at that on my website at thedailygold.com, so I'm going to have a few similar thoughts to that. I'm going to try and speak quickly here so the video is able to be recorded and uploaded more quickly. But I want to start with silver. I really think that silver is leading gold for several reasons that I noted in the editorial, and I think we're going to see silver bottom before gold. This chart shows all the bear analogs, and it excludes the 1980 to 82 crash. So silver right now, it closed at a new weekly low, so it's in breakdown mode. It's basically on the cusp of having its second worst bear market of all time, but this chart makes a strong argument that it's going to bottom very soon. Now, this is something I just put together in the last couple minutes as we got updated COT data. This looks at the speculative long position, or the net speculative position, which is usually always long, as a percentage of open interest. And this declined to about 9% this week, and this data is as of Tuesday, so it doesn't take into account the recent sell-off. And there's about 14,000 long contracts. And at the low last year, as you see there, as a percentage, it was less than 3% of open interest. It was around 6,000 long contracts. So we have a little bit more to go to match that. But again, when we see the report next week, we could be possibly even lower than that. So this is a very good sign if you're a contrarian. And delving a little bit deeper into this report, this chart, my friend Tio Burkan of the Short Side of Long blog, he posted this last week, and this looks at the gross short positions, gross speculative short positions. So this isn't the net position, this is just how many short positions are out there. And I updated this, as you'll see on the next chart. After this week, it's now at an all-time high. It's higher than the peak a couple months ago. Now, as a percentage of open interest, we're not quite there yet. I haven't looked at the data before 2004, but that peak we had, as you can see, at the very end of 2013, that's a very significant peak as far as gross shorts as a percentage of open interest. Again, we're surging in the last few weeks, and we'll see where we are next week. We very well could be very close to an all-time high as far as gross shorts as a percentage of open interest. And well, before I get to the gold stocks, let me just go back. So if you read my editorial, you'll notice that you'll see a chart that shows very strong support for silver, a trend line dating back 11 or 12 years. That support is around $17. So we have a very interesting setup where we're plunging, and we could be plunging to the end of a bear market into a major bottom and a tremendous buying opportunity coming up in the next couple of weeks. And just to repeat myself, I do believe silver is going to bottom ahead of gold, so watch silver. Now, moving on to the gold stocks, and I also think that the gold stocks, I mean, there's many different ETFs out there. I don't know if every of those ETFs is going to bottom before gold, but I do think some of them will, perhaps most of them. Again, this is a bear market analog chart. And this just looks like we're on the final leg down here. I mean, everybody's getting scared. Everybody's talking about how gold stocks are garbage, which, I mean, they are. Throughout most of history, they have been, but I don't think that's going to be the case right now going into the next 4 or 5 years. I mean, this looks like we're similar to silver. We're on the cusp of a major bottom and a real historic buying opportunity. And we could make a double bottom if we go to a new low. I think it would just be a marginal new low, and I mean, that doesn't change the fact that probably in the next month or two we're going to see a bottom and then a tremendous rally into the end of summer and into the fall. And so the last chart tells us we could go a little bit lower. So just pull up a chart. This is GDM. This is the forerunner to GDX. It's a very broad index. It's broader than the Huey and some of those other indices. And the monthly chart, even though we had a little bit of a rally, well, actually, I posted this chart before we had that end of day rally. Even though we had that rally, the monthly chart is still very sick, and it looks to me like we're going to come down to that support at 560 to 570. Maybe we go a little bit below it. We get a fake out move or a bear trap. But again, I mean, that's strong support, 12-year strong support. If you're a contrarian, looks like a perfect setup. And let's talk about fundamentals briefly. What could be driving this? Because we really didn't have any fundamental catalysts at the last two bottoms, the one we had last June 2013 and then December 2013. But since that last bottom, we're starting to see inflation tick up. I mean, our CPI is increasing. Canada's CPI, I think, is at a 2-year high. This chart is from John Williams at shadowstats.com. He has his CPI and also the government one. I'm not here to debate inflation, what's inflation and statistics or BS, etc. But these are things we have to look at. These are things that traders and the market care about. As we can see, inflation is starting to tick up. And here's another indication of that. In red, you have MIT's CPI, which is from their project called the Billion Prices Project. Its annual change is in red, while the CPI is in blue. Since 2009, MIT's CPI has basically been leading the CPI. It kept rising in 2010 when the CPI dipped, and it turned down ahead of the CPI in 2011 when the CPI kept rising for a few more months. Now what do we see? That CPI is starting to accelerate to the upside. Well, it's not starting to, it already has. So again, this is another indication that inflation is picking up. And that's going to be a positive for precious metals. It's a potential positive fundamental catalyst. And we know that there's been a lot of money printing, but banks haven't been lending it out. But this chart shows essentially credit growth, bank lending growth. It's quarterly data, but this is a real historical look, and we can see that it's starting to pick up in the last few quarters. I mean, maybe I should have put a short-term chart on here, but the credit growth it started to increase in the last couple of quarters, and it's very close to exceeding the previous peak at the end of 2011. So if it's ticking up, it's going up, it's increasing, and if it just continues for several more quarters, then it's going to be in the mainstream, and people are really going to start to take note of that. And of course, later on, that's going to cause more inflation. And just to look back at history, I mean, gold stocks had a major bottom in 1976, and we can see that this chart troughed right after 1975, and after it increased for several quarters into 1976, that's when gold stocks started to bottom. Now, I'm not saying there's a direct correlation or causation or whatever, but it's just something to keep in mind. If we see more lending, we see credit growing, we already see inflation picking up, and now we're seeing more money as far as lending and credit growth, that increases. That's going to further stoke inflation down the line. So, and also we're later in the economic cycle. I mean, we've been in a very weak expansion, but it's 5 years old, going into its 6th year very soon. And what do you get at the end of an economic expansion? You tend to get inflation. So again, I'm looking at these things. This could be the fundamental catalyst that sends precious metals into a new bull market. Now, we're starting to see emerging markets strengthen. Commodities have already bottomed, although it looks like the CCI is going to turn down or is turning down. But again, this is something to keep an eye on because this could be the fundamental backdrop that supports not only a sharp rebound in precious metals, but a sharp rebound and then continuation of that into next year. Thank you so much for taking the time to watch my video and listen. Just a little bit here about my service. You can go to thedailygold.com. The top right corner, you can sign up for my free newsletter. I also have a premium service. And we have a real money portfolio that we trade in for subscribers. We tell them in our weekly updates what are we planning to buy, at what price. And then when we all trades that are made, an email confirmation is sent to subscribers. And we send out weekly updates, usually Saturday morning or Saturday afternoon. That's all for now. Thank you so much for listening.